Welcome to The Explainer. We're about to tackle what might be one of life's trickiest financial puzzles, and that's the cost of aged care here in Australia. It's a journey so many of us, or our parents, will face. Our goal? To give you a clear map to help you find your way.
And this quote, wow, it really gets right to the heart of it, doesn't it? It's not just about the money, it's about peace of mind. And that's why getting this right from the get-go, is just so important.
Okay, so to make this all a bit easier to digest, here's our plan. We'll look at why this is such a big deal, walk through the first steps, break down the actual costs, talk about the big questions like the family home, and wrap up with why getting the right advice is a non-negotiable.
All right, let's get into it. The thing is, this is so much more than just numbers on a page. It's deeply personal, and honestly, it can feel completely overwhelming. I mean, you're juggling health, family dynamics, and massive life changes all at the same time.
So when you first start digging into aged care, a whole bunch of questions just pop up, right? Can we even afford this? What's going to happen to the pension? How on earth are all these costs even calculated? And then there's the big one, the one that keeps people up at night. What do we do about the family home?
Okay, so with all that going on, where do you even start? It can feel like a total maze. But the good news is, there's a single official front door for everyone. And it all begins with getting an assessment.
So here's the deal. Before you can get your hands on most government-funded services, you have to get this official assessment. It's basically a three-step process. First, you get in touch with My Aged Care. Then, you set up a free assessment, usually right in your own home. And finally, you get what's called a support plan. Think of that plan as the key that unlocks everything else.
And here's the info you need to actually do that, the phone number and the website. And listen, that pro tip on the screen is a big one. There can be a real wait time for these things, so my advice, get on it sooner rather than later. Don't wait until you're in a crisis.
All right, let's get to the main event, the money. We're going to break down how the costs for residential care actually work. Now, this is the part that trips a lot of people up, but I promise, once you see it laid out, it makes a lot more sense.
Okay, so think of the costs as being split into four main buckets. First, there's the accommodation cost. That's for your actual room. Second is the basic daily fee, which covers all the day-to-day stuff like food and laundry. Third, you might have a means-tested fee, which is based on your income and assets. And last, there are any extra or optional fees for things like getting a newspaper delivered or having pay TV. That's it, 4 buckets.
Now, for that first bucket, accommodation, you're going to hear two acronyms over and over, RAD and DAP. Let's clear these up right now. A RAD, or Refundable Accommodation Deposit, is basically a big lump sum you pay up front. A DAP, or Daily Accommodation Payment, is more like paying rent on a daily basis. Simple as that.
This really breaks it down nicely. The easiest way to think about it is a RAD is like buying your place, and a DAP is like renting it. Now, why choose one over the other? Well, a big plus for the RAD is that the government doesn't count it when they're working out your age pension. But you need a big chunk of cash up front. The DAP, on the other hand, means you don't need that big lump sum, which can be great if you want to keep your capital free.
Okay, next up is the basic daily fee. This one's super straightforward. Basically, everyone pays it. It covers all your living costs, meals, cleaning, laundry, you name it. It's a standard fee set at 85% of the single age pension, and it doesn't matter what your financial situation is. Okay, now we're getting into the stuff that really carries a lot of emotional weight. We're going to tackle the big, tough questions about the family home, about gifting money to your kids, and how all this stuff plays with the age pension.
And here it is, the big one. Will I have to sell my house? This is almost always the first question people ask, and you can feel the stress in their voice. It's just a massive emotional hurdle to even think about.
So, the answer is, it depends. It's not a simple yes or no. Your home is completely exempt if a protected person is still living there. Now, who's a protected person? That could be your spouse, a dependent child, or even a carer who's been living there for a while. If no one like that is in the house, then yes, its value is counted, but only up to a certain limit, a capped amount.
Here's another one we hear all the time. Can I just give my money or assets away to the kids before I go into care? You know, the idea is to reduce what the government can see to hopefully lower the fees you have to pay.
Well, yes, you can, but, and it's a big but, there are very strict rules. You're allowed to gift $10,000 per financial year, but no more than $30,000 in total over a 5-year period. If you go over those limits, that extra money is still counted as your asset for 5 years. So you can't just give it all away and expect it not to count.
Wow, okay. We have covered a ton of ground here. We've talked about assessments, RADs, DAPs, the family home, the whole shebang. And all of this leads us to what is, without a doubt, the single most important point of this entire explainer.
And the answer is a simple, straightforward yes. Our source material could not be clearer about this. Given how complex all of this is, and the fact that your situation is completely unique to you, getting expert advice isn't just a good idea, it's absolutely essential. And here's exactly why. Every single one of these decisions creates a ripple effect. The choice you make, say, between paying a RAD or a DAP, doesn't just exist in a vacuum. It affects your pension, it affects the actual cost of care you end up paying, and it even affects what's left for your family and your estate. It's all connected. So think of what we've done today as giving you all the pieces of the puzzle. You know what they look like now. But the really critical next step? It's finding someone who can help you put all those pieces together for you, for your life. And just to wrap up, it's really important to remember that what we've given you today is a general guide. It's a map. It's not financial advice, because it doesn't take your personal situation into account. You've got to consider if this info is right for your own needs, and, honestly, you really should seek out professional advice from a qualified financial advisor. Someone like a specialist aged care advisor, for example, Sean Sullivan, who's an authorized representative of Vivid Financial Planning and holds an Australian financial services license, is exactly the kind of expert who can provide that tailored, one-on-one guidance. Thanks for joining us.